Welcome to this month's Market Update. I'm here as always with Alexandra Veroude, Senior Consultant with Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Alexandra.
Hi, Wayne.
Well, after a few turbulent months, it was a somewhat calmer month over the last 30 days or so. How did global equity markets perform?
So we saw US equities were around 5% higher over June. We saw the S&P reach new record highs, erasing the losses that had occurred since February. And they're up around 25% above those April lows that we saw post the Liberation Day sell-off. Investment sentiment has been underpinned by signs of progress on trade negotiations, or at least limited material new news, which I'm not sure that we'll be able to say when we meet again next month. Across the UK and Europe, outcomes in equity markets were more lackluster and slightly lower over June. Investors were more cautious around the escalation of Middle East tensions and the looming trade tariff deadlines. In China, we're seeing Chinese tech names continue to support Chinese equities, up around 4% over the month, and we're seeing that continuation of strong gains that we've seen over the year.
And so what kind of a month was it for Australian share markets?
In Australia, we saw equities rise modestly over June, where Commonwealth Bank of Australia was leading the charge there. In fact, CBA shares have risen nearly 50% over the past financial year. Resource sector continues to underperform as we're seeing that continuation of weaker Chinese demand, keeping commodity prices soft. But as a whole, equity markets were really quite resilient despite the military actions, escalations that occurred between Iran and Israel over the month. But we did see oil prices jump during the days of the heightened conflict, jumped more than $10 a barrel during these days, but have since retraced, and the oil market is expected to remain well supplied.
So a pretty good month for equity markets, but also a good month for fixed income investors as well. What was driving that?
That's correct. We saw investors in fixed income indices saw gains over June, with yields lower across Australia, US, UK, Japan, supporting both Australian-focused and global bond indices. Central banks are still in the large lowering policy, inflation slowing, and we saw that element of flight to safety during the conflict that was pushing yields lower. In Australia, falling short-term interest rates around greater expectations of RBA easing assisted the Australian Bond Bank Bill Index in June, while tightening Australian corporate bond spreads boosted those indices.
So you mentioned the expectations around the RBA dropping rates, but of course at their July meeting, the Reserve Bank sprung a bit of a surprise on most commentators, keeping rates on hold. Just talk us through what happened there and what do you think we can expect in the months ahead from the RBA?
So it was really interesting at the RBA's July meeting. Heading into this meeting, markets and economists were widely expecting the RBA to ease policy. It was around 95% priced in. So when the RBA announced that it was keeping rates on hold, we saw the Aussie dollar spike and bond yields move higher. Reserve Bank of Australia Governor Michelle Bullock had the task of explaining why rates were kept on hold in the press conference following the statement. And she said that the RBA was really waiting for more information on inflation. They wanted to wait for the second quarter CPI print, which is due at the end of July, saying that board members took different readings from the monthly inflation series. So on balance, they thought it was better to wait for the complete quarterly series, which is more comprehensive, to make their decision. But she emphasized that the easing bias remains, and it was more of a decision around timing, not direction, and that a continuation of the easing cycle can be expected if inflation continues to moderate as they expect. And so, although the rate cut wasn't delivered in July, which was widely expected, markets are looking toward a rate cut in August and at least another by year end. But focus will really be on this second quarter inflation print at the end of the month.
Well, as markets keep looking forward, as you just suggest, we're of course now into a new financial year for Australian investors at least. What do you think we can expect in the month ahead? I'm guessing tariffs will probably rear their head again.
That's correct, Wayne. We really think that the month ahead, tariffs will be front of focus with this expiry of the 90-day agreements that brought calm back to markets back in April. We're seeing new agreements being finalized, new tariff rates being announced as these new agreements are released, and that there's a new deadline being set for agreements to be reached for the beginning of August. So we're expecting volatility around this time as markets digest and trade is reassessed in light of this new tariff regime.
Well, that's a great update. Thanks, Alexandra. And thanks also to you for watching this month's Market Update.